My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Welcome back, folks. Today, zooming in from sunny Florida, we've got a real estate entrepreneur who's in the multifamily space. His name is Victor Collazo, and we're going to be talking about all things multifamily. So, Victor, welcome to the show.
Thank you, sir. Much appreciated.
All right. So, Victor, we're shooting this episode the middle of November 2024. Give us a little snapshot. What does real estate investing look like for you? What are you focusing on? What do you currently have in the portfolio? That kind of stuff. Give us a big picture overview.
Sure. So we're in over 300 doors in Kansas and also in San Antonio, Texas. So our main focus, our main bread and butter is on the multifamily side, typically 50 to 100 units. I call them mid-size. So that is what our daily our grind. I guess that's what we do every day. It's what we look at. We look at the
Nice.
separate properties and
So how many of those kind of properties do you currently have in the portfolio?
so 92 are in Wichita, Kansas, and the other
Is that
remaining
is
over
that one
200.
unit in Wichita?
Uh
Yeah.
yes, yeah,
One
yeah.
property? Yeah.
Well, it's one property, right? 23 buildings, but correct, one property.
23 buildings on one property. Holy crap,
Yeah.
man. What is that? 23 triplexes? What do we got going on
Yeah,
there?
they're up there. They're top and bottom, but I mean, I know, yeah, it's a lot. So it's
Okay,
total
that's a
92 units.
wow. That's a lot. Okay. And then the other ones, what kind of properties are they? The other multifamilies?
So we also invest in San Antonio, and there's 200 over 200 units there as well.
How many different buildings does that represent?
That one's a lot less. They're larger scale buildings. I believe it's like 14 buildings, something to that nature.
Okay, so interesting. So you're buying a whole bunch of small multifamilies. Like, are you buying a portfolio for somebody, or are these just a bunch of 4 unit, 6 unit type buildings that are all part of the same? I'm trying to get my head around what these
Yeah,
things
yeah.
look
So
like.
So basically, yeah. So you'll see, if you see an apartment complex,
Yeah,
I guess I'd make it easier that way. So basically, an entire complex is what we purchase. The entire facility. You'll see the pools, the gyms, the amenities. But yeah, so sometimes they're structured, at least depending on where, and obviously, you purchase them at is going to be built differently.
yeah,
But yeah, basically everything that's on that land, I guess, if you will, on that parcel is what we purchase.
yeah. Cool. Very, very cool. So it's not a traditional apartment building per se, as we're accustomed to seeing them, but it is multifamily because it's all part of the same community.
Correct. Yes, sir.
Got it. Got it. And how long you been doing this for so far, Victor?
We started back around 2020, started in single family and then pivoted to multifamily.
Well, hey man, that's pretty good in 4 years, going from zero to what did you say, 300 doors, 300 units?
Correct. Yes,
Yeah.
sir.
Yeah, yeah, yeah. So what's been some of your big takeaways switching from single family homes into multifamily?
A couple of things. One of the big takeaways is, and the reason we do it is risk. It actually, a lot of people think that the smaller the property, the less the risk. I mean, and it's actually the opposite. The more doors you have, actually less risk. Because if we think about it, we have 92 units. If 5 or 10 people move out, yes, it hurts our bottom line. But at the end of the day, we're not losing the property. Hopefully we're still paying all our bills. If you have a duplex, and one person moved out, you're 50% vacant, or same thing as those smaller units. So it's a mindset shift. That was one of the biggest thing is understanding those risks and some from that perspective.
Yeah, definitely. So before you jumped into multifamily, how many single families or small properties did you have before you made the
Only
leap?
two.
Two. Yeah, well, that's good.
That's it.
So you learned the lesson quickly and you moved up. What were some of the challenges that you faced besides the mindset going from small deals into much bigger deals?
Education, and just from an understanding that my first investment was with Grant Cardone, and I did not know. You don't know what you don't know, right? So we did not know that we could be owners, and we could be what's called GPs, general partners. We only thought we could be investors or limited partners. And at that time when we invested with Grant Cardone, great guy, and I met him, and he has a fantastic business model, but his focus is mainly on he's the GP and he wants other investors to come in. So did another boot camp, and when I went to the other boot camp. That's when I found out and learned and understood that you can be an owner of this building. Most people drive by these buildings and they have no clue that they're like, wait, I can be an owner of this building. When I tell people, they're like, no way. They don't think they can. And then when I start explaining how and why, light bulb goes off, and then they're like, wow.
Yeah, very, very cool. So, did you have extra deep pockets when you bought your first multifamily property? Did you do a syndication? What did you do? How did you jump into that first one?
No, first one, no, I'm a believer in investing myself, but no, I did not have extra deep pockets whatsoever. Use OPM, other people's money. So from a syndication standpoint for the Wichita, Kansas one, we paid 5.5 million. We raised $3 million in private equity, and from friends, family, professionals, and everybody in between.
Very cool. Very cool. And what did you kind of learn through that initial capital raising experience, Victor?
Capital raise early and often, and
It's like looking for deals, right? You never stop, right? You got to be doing both at the same time.
exactly. Yeah, exactly. The capital raising is, depending on the market, it can be a little challenging, but yeah, I mean, I talked to everybody and anybody. Literally, I talked to my dentist for a year, and he finally, and I'm not a salesperson, and I just meant just talking to him from the conversational
Which
standpoint,
is
right?
hard to do when he's digging around in your mouth.
So there was a lot of trust factor there, right? He's like, well, digging in my mouth. He's like, well, if I give you $50,000, giving a little extra push, am I gonna get good returns? I'm like,
Exactly. No, very, very smart. So yeah, start early and keep going with the capital raising. But you raised a lot of money. What was the time frame that it took to raise that 3 mil?
So it was a team effort. It wasn't just me by myself; it was our entire team, our GP team. It took us a little bit less than 2 months.
Okay. So what does that mean? A GP team? How many people are GPs on that project?
On this one, we do have a large GP team. We have about eight. So GP is our general partner. So myself and other partners, there's different roles and responsibilities each of us have. But basically, at the end of the day, each of us raise capital. We all have a goal to raise, a specific goal we want to raise, and then we target that goal and we go from there.
All right. And so that was the one in Wichita. What about the other properties? How have you structured those?
So that one isn't, we're actually LPs, limited partners, and that one right there, that's why I said 300 combined between LPs and GPs.
Mhm.
But that one is, since we're investors in that one, it's a little bit different. We're not GPs in that deal. But we are on the call. We are on the week, the technically monthly calls now with them because it's been about a year.
Yeah. All right. Very, very good. So when you're the GPs, you're all kind of responsible for shaking the tree and raising some capital for a deal. What about once you've got the deal under contract? How do you divvy up responsibilities there amongst different GPs? What are you guys responsible for? What does that look like after the deal has been purchased?
Yeah, so we discussed that. That's a great question. We all discussed that prior to us moving forward and signing and closing on a deal in terms of who's going to be responsible for what. We looked at what our background is. We looked about what we're good at, what we're not good at, right? And we
Mhm.
also looked at what do we want to learn, what do we want to do. So we all agreed that we're all asset managers. We all do asset management 100% for one, and for two, each of us has a dual role. And what I mean by that is my role is I'm a project manager and I'm also investor relations. But also, if I'm out, if I'm sick, if I'm emergency, somebody can step up and do that role, vice
Mm.
versa. So we all back each other up from that perspective. So we have our main role, primary, and our secondary, but we all collectively work together as a team to make sure that at the end of the day, we do what we need to do to get everything done.
Sounds like a SEAL team.
I am probably military, but not not a SEAL. Interesting enough.
Yeah, yeah, no, very, very cool, very cool. So moving ahead, what are your goals for the next for 2025 now that we're almost there?
Yeah, next goals for 2025. I'm still continuing to move forward. I hear a lot of people pulling back from multifamily right now. Deals are tight. They're challenging, and a lot of them are not penciling out. But I'm like a shark. I'm in hunt mode. And the
Yeah.
reason I mean by it, a lot of people are. I was at a conference this past weekend with over 700 people, and I've heard a lot of people saying I'm not looking anymore. And I'm like, well, that's great because you're not looking, so that means I'm going to look more. So I'm
Yeah.
doubling down actually that those efforts. 2025, our goal is to get in at least about 400 units or, within 12 months.
Yeah. Now, are you going to keep working with that same core group of GPs, so the eight of you moving forward, or is that kind of flexible? Do you work with different partners on different deals?
Yeah, I do work with different partners on different deals, because they may not have the time to work on those deals, or they may not be interested in the next deal. So I have a very large network, but I work with some very experienced, knowledgeable people that are doing it 20, 30 years, and
Mhm.
some folks that have been doing it, 1 year, 1 to 2 years. And it may sound a little scary, but there's a lot of backing behind that. And we make sure that we're all successful at the end of the day. And that's how we get people to learn. That's the only way to learn is by doing, right? So.
Mhm. So when you're doing these multifamily deals, Victor, what's kind of the end game with them? So what's your exit strategy with these projects?
So our exit strategy is five. We do basically a 5 year hold, and hopefully the goal is. So our business plan is 5 years or less. What we do is we want to make sure within 5 years or less we either refinance or sell, depending on what the market is. No one has a crystal ball, but right now, our Wichita deal, we're going. The goal is to sell that one in 5 years because that's what makes sense, today, and we're already achieving above market rent. So our goal is to always make sure that our investors are. If we get to 2x the deal. If we have minimum KPIs, 15% IRR, 20% IRR, cash on cash, a lot of those basics, right? But our goal is to make sure we have a clean, clean and safe, stable asset. Make sure the assets taken care of first, and then the investors, and then us, we go last.
Yeah, very, very good. Um, what was I going to ask you? Yeah, that makes sense. So are you focusing primarily on value add properties, or do you guys want to purchase them already ready to go?
No, that's our business plan is value add. We want to go in, increase the value, increase the NOI, and then that way we can increase the property value as a whole. But that's our business model right now is value add. And we
Value add in what sense? There's all sorts of ways you can add value. What are you guys typically looking for?
Yeah, we don't do like full renovations. We typically do light turns and some medium turns in terms of we'll do painting of cabinets, we'll do some carpet and some flooring replacement, gradings to some stainless steel appliances. Typically about that 7, 8 to maybe $10,000 mark per unit turn. And then what we have a lot of exterior that we're doing as well. So we want to make sure the property is updated, upgraded, and we'll do about 70%. We will upgrade the property. We never upgrade 100%. And the reason we do that is because when the next buyer comes in, we want to have some meat on the bone. We want to leave some value so that way they can come in, they can add value to the property, and that way, they can also increase the NOI for their
You see a
future.
lift. That's
Yeah.
interesting. That's a smart idea there. Yeah. Leave a
Yeah,
little
because
bit
if
of
we if we do it 100% renovation, which I see all the time in Austin right now, I see a lot of that. And so, but there, when somebody comes in, it's very hard to increase the rent, increase the property. It's like, what's the buy there? What's the play there? So it's a challenge.
yeah. So your end buyer is basically somebody like you who wants to get in and still have some lift versus trying to sell it to an institution that just wants to park their cash, basically.
Exactly.
Yeah. Very, very cool. Awesome. Well, this has been very interesting, Victor. And if people want to connect with you and find out more about what you're up to, where should they go?
Yeah, they can reach us at our website, extraordinaryassets.com.
That's a good name. Awesome, Victor. Well, thanks very much for being on the show. This has been fun.
My pleasure, Dave. Thank you, sir.
All right, everybody, take care, and we'll see you on the next one. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com. Now, at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.